Welcome to Koru training video. In this video, we will be taking you through the process of using Koru to prepare a partnership tax computation. There are two parts to this video. Part 1, set up clients and jobs. Part 2, set up main tax computation. If your role does not involve setting up clients/jobs, you may prefer to skip the first part of the video and proceed to part 2. Part 1, set up clients/jobs. Before you can start to prepare the tax computation, you must set up the client and the compliance job. Once you log in, the first page you will see is your client list. This is the starting point for all works in Koru, regardless of whether your client is an individual, a company, or in today's case, a partnership. If the client is not in the list, you must set up the profile of your client first. 1. Add a client. To start, click on Add Client and select Partnership as the client type. Fill in the details and then save. Once successfully saved, your partnership profile is ready and you can move on to the next step. 2. Select Engagement Services. The type of jobs that can be created for this client depends on the type of services that have been engaged. To prepare tax computation for a partnership, select the Partnership Tax and save. This step must be done before you can proceed to add a job. 3. Add Job. Under the client list, filter to find the client. To add a job, click on Add Job. Select the job as Partnership Tax for the required year of assessment. Rest of the details are related to job management that can be left as blank or defaulted by Koru. To proceed, you will be asked to confirm that you are agreeable for 1 credit to be deducted from your subscription. Once confirmed, the job is created and you are ready to start preparing the tax computation. Part 2, prepare the main tax computation. You can only proceed to this step after a job has been created. To access the list of jobs, click on the blue hyperlink under the heading of Tax Compliance. This will take you to the list of jobs created for this client. Click Edit, Open Assessment for the year of assessment to work on. The home page is what you see when you first open the assessment. This is a dashboard that provides summary details of the main tax computation. To use Koru to prepare the main tax computation, there are 4 steps to provide Koru with the required data. Step 1 and 2 must be done before you can proceed to Step 3 and 4. Let's now go through each steps in detail. Step 1, set up Partnership Agreement. Partnership Agreement defines the partners and the allocation of income/loss to each partner. To set up the partners and its agreement, go to Disclosure, under the heading of Partnership. First, we will set up the list of partners of this partnership. Click on Partners to see the list of partners. To add a partner, click Add New Taxpayer Partner. Select the appropriate identification type depending on whether the partners of a partnership is an individual, company, or another partnership. Enter the rest of the details and then repeat the step for each partners. Next, you need to set up the agreement to disclose the allocation of income/loss to each partners under the agreement. If there are movements in partners or allocation during the year, a separate agreement must be set up for each change in the agreement. Click on Partner Agreement to see the list of agreements. Click Add New Taxpayer Partnership Agreement. For each agreement, state the effective duration of this agreement and the method of allocation. Click on Add Partners Allocation to assign the partners to this agreement. For each partner under this agreement, state the percentage allocated. Next, you will need to select the partner that is the precedent partner to represent the partnership in the submission to MyTax. Repeat the steps for each agreement for the year of assessment. Once all the agreements and partners of each agreement are done, we are ready to move on to prepare the sources of income. Step 2, set up income sources. Each type of income must be set up as a source irrespective of whether the income is business or non-business in nature. This is important for Koru to automatically enforce the tax rules associated with each type of income. All partnership must have at least 1 business source. If the partnership also received other sources of income, e.g. rental, interest, etc., an additional source needs to be created for each type. In this video we will show how to create a business and rental source. Business source. It is advisable to create the business source first as Koru will automatically default it to be the main source. Click Add New Source, choose the type as business, then fill in the details, and key in your profit before tax. Rental source. Then proceed to add any other sources of income. Click Add New Source, choose the type as rental and enter the rental details. Description is what is printed in any schedule that is filtered by income source. Short description is the label that will appear in Koru when indicating the source that an income expense allowance is related to. Remember, it is important to perform Step 1 and Step 2 before you proceed to Step 3 and 4. Step 3, Fixed Asset Module. Keep in mind that Asset Module will only appear if the business income source is added under the Source module. So you must create the business source before you can add in the asset details. Under the Asset module, this is where the fixed assets are set up for the purpose of claiming capital allowance. All assets under the Asset module will be used to generate both the fixed assets and capital allowance related schedules, which mean you only need to set up the asset once. In this part of video, we will show you the method to key in the asset details with examples. In Koru, asset can be keyed in either manually one at a time, or you can use the import facilities to import a list of assets in an Excel file. Kindly refer to the training videos under the How to series for steps to use the import feature. Before you can add an asset or import assets, you must start with creating a list of the asset categories. All assets in Koru are grouped under the asset category that it was grouped under the fixed asset listing in accounting or the audited report. You only need to set up the list of asset categories during the first year in Koru unless there are additions to the asset category in subsequent year of assessments. To create an asset category, click on the Add Category button. Category code is the short code that is used when importing assets from Excel. Description of an asset category is what will be printed in the schedules. For ease of reconciliation, general practice is to use the same description as the fixed asset listing. Koru will automatically default the IA and AA according to the selected LHDM category. The rate of each asset can still be changed if required. Asset category that are related to motor vehicle and subjected to restriction is when you need to select Subject to Vehicle Restriction. Once the asset category is created, we can now move on to create an asset purchased in prior year under Furniture and Fitting category. To do so, click on the Brought Forward filter, click on the category and click on Add Asset. Enter on the asset details and save. To view the asset details, click on the Edit button. On the left panel is the asset details. To make changes to the details, click on the Edit button. The Qualifying Asset section contains the details to qualify for allowance claim. The Allowance Claim section contains the detail to calculate the capital allowance to claim. The IA and AA is based on the LHDM category that we assign to the asset category. You may change the rate if different from the rates used in prior years. If the asset is not fully claimed, update the residual brought forward as per the carry forward from the immediate prior year. After click on Save, you will see that the CA claim is automatically calculated and updated on the left panel here, so users do not need to click any button for the computation. The next example to show is adding an asset purchased in the current year. Click on Addition filter, select the category and click on Add Asset. Key in the asset details. Then click on Save. For new addition asset, we do not need to update the brought forward value, and since the IA is automatically assigned, we are done with creating an addition asset. Last part in the asset setup section is how to dispose off an asset in the current year. Click Edit on the asset to dispose. Click on the Disposal section and then Add Disposal. Select the method of disposal and whether to dispose the asset, e.g. full disposal, or components, e.g. partial disposal. In the case of a sale, enter the sales amount and then save. After the save, you will see on the Asset Detail panel, the balancing charge/allowance is already automatically calculated. That's all the examples for asset in this video. If you want instructions on how to create assets under other scenarios, you can refer to the How to series of training videos. To generate the schedules, go to the Report module. Filter on Fixed Asset to get the list of fixed asset related schedules. Select the Capital Allowance Detailed Schedule and then download as PDF. The schedule lists down all the assets and its associated rates, brought forward, current year claim and the carry forward into the following year. So that's all on how to set up the fixed asset in Koru. Now let's move on to the last step of partnership tax preparation, which is to set up the Notes to Account. Step 4, Notes to Account. Analysis module is where you analyze the tax treatment of all income and expenses related to the current year of assessment. In Koru, you can see that there is a module called Analysis from the left menu bar. Click on it. There are different filters available to help the navigation. Let's start with income. Details of all income, no matter business or non-business, are entered here for analysis. Before adding income transaction, we need to create an income account. Click on Add Account. The income account can be added only if the income source is created under the Source module. Since this partnership only has business and rental income, you are only allowed to add a rental account and business account. Click on the Add Business Account and enter the description. Account number and reference to source are used to link and cross-reference to the accounting information once the accounting module is ready. Click on Save. After adding the income account, to edit changes, go to the account details and change the details accordingly. Then click on Save. You can refer to the training videos under the How to series for more info on account details. To create a transaction on the business account, click on Add Transaction and key in the details. This income is a non-taxable income. Select the tax treatment from the drop-down list. Then click on Save. Let's look at rental income account and its transaction before moving to expenses. Repeat the process of adding rental account. Then click on Save. Click on the account and add transaction. Key in the property details. Click on Save. The transaction is now created. To provide further information or to edit, click on Edit button. The left panel here shows the details of the transaction. Click on the Edit if you need to amend the details. The details of tenant, co-owner, and IBA claim can be entered under the respective filter. You may refer to the training video on non-business income under the Koru individual getting started. Next we will look at creating expenses account and transaction. If you do not need to analyze in detail certain expenses account but such expenses involve tax adjustment, you still need to create an account to allow you to enter the details of such tax adjustment. Click on P&L expenses. The method of creating expense account and transaction is the same as that of income. Firstly, create the expense account. Click on Add Account and key in the expense account description. Click on Save. After creating the expenses account, we can then add transaction to it. Click on Add Transaction and key in the transaction details. This is a deductible expenses. We do not need to click on the Analyze button to change the expense tax treatment. Just click on Save and continue to key in. Customer entertainment is 50% deductible expenses. So click on Analyze button under the expense tax treatment, select Disallowable expenses. The percentage of adjustment is to indicate how much to add back. This is a 50% deductible, which means the remaining 50% should be added back. So you need to change the percentage to 50%. If the transaction is fully non-deductible, then the percentage remains at 100%. The tax adjusted amount will be calculated accordingly. Then click on Save. Next we will show how to create a direct rental expenses. This is the expenses account that I am going to use. Click on Add Transaction. Key in the expenses details. Click on Analyze button to change the tax treatment from deductible to direct rental. Under the rental property, select the property that is in the rental income. Then click on Save. If you now go to the render income and click to edit the rental property, you will see the direct rental expense has been updated against the property. If you wish to provide any supporting details against the transaction, you can click on Edit, Upload Supporting Schedule. Choose the file to upload and update the description. Click Save and the document is saved under the Maintain Supporting Schedules tab. No amendments to the document can be done in Koru. You need to download the supporting schedule to your individual machine, make the amendment and re-upload again. In the case of partnership, there will be expenses relating to partners' benefits such as salary or allowance, etc. To set up such expenses, create an expense account. Add the transaction with the description and the amount, then click on Analyze. Under the expense tax treatment, select partner's benefit and the partner that received the salary. Select the type of benefit as the salary allowance bonus EPF and then click on Save. Apart from these three examples of expenses, there are a lot of other types of expenses and its tax treatment that are supported by Koru. For example, double deduction, asset expense off, etc. You can refer to the training video to find out more. Once all the data relating to the tax computation are set up under the respective module, the last step is to run the schedules to show how the data are taken up in the main tax computation and all its associated schedules. Let's go to the report module to generate some of the schedules related to the partnership. In the rental schedule, the direct rental expenses are deducted from the rental income to arrive at the statutory taxable property renter income. The reference here shows that the details of the expenses are listed in the AA schedule. In the AA schedule, we listed all the income and expense accounts. The summary section of the account shows the respective tax treatment. The rental schedule referenced the account No and the summary total reconcile to the total taken up against the rental property. The main tax computation shows all the income and expenses taken up accordingly to arrive at the tax payable. In the case of partnership tax computation, a summary of the allocation to each partner is shown under the allocation of divisible income or loss and allowance. Partners' benefits are shown under the allocation of partners' benefits section. Lastly, CP30 summarizes the partnership income details allocated to each partner automatically. This allows each partner to declare the income in their respective tax declaration. That concludes our video on the getting started to prepare a partnership tax computation. Thanks for watching. If you have further questions, feel free to reach out.